Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for January the 20th. Before I jump into the content, please do me a huge favor, hit that thumbs up button. Don't forget to subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So what's the market doing? Where are we headed? Well, I'm about to give you my opinion on that matter. So the first chart that I want to take a look at today is actually not a Bitcoin chart. I want to take a look at the total market cap, because the total market cap has been a chart that honestly I never even looked at prior to early 2019. I never looked at it in 2017. I never looked at it in 2018. I never saw people talking about it because I was in a very small little bubble. There was a very few, like a select few people that I was following. Unfortunately, I did a bad job with vetting those people, and they had some really bad advice. And I didn't know about so many things. I didn't know about past market cycles. I knew that Bitcoin had crashed in 2013, but that was about it, right? I didn't realize that it went through these cycles over and over again. And so it's just amazing when I look back at the last 3 years. Like if I could go back in time 3 years, not have any knowledge of what price was going to do, but just understood technical analysis, understood market cycles, understood sentiment, all these things, I could have gotten some very, very incredible results. Fortunately, I had the rest of my life to put this stuff to good use, but hopefully if you are new to this, or if you haven't taken time to learn technical analysis, you won't be like me. You won't wait until you lose a ton of money to really get your head in the game. So when we look at this total market cap, I'm going to put this, we're going to look at it just like it's a price chart, just like it's a Bitcoin chart or Litecoin chart or any other coin. All right. So we have a 200-day moving average on here. We have volume on here, and we have RSI on here. And if we take a look at RSI, people say, oh, you can't trade the total market cap, James. You can't buy that coin. That's bullshit. You can absolutely trade the total market cap. You can use this as an indicator for what Bitcoin is getting ready to do. A perfect example of this is right here. We have the total market cap putting in a very, very significant bullish divergence on the daily chart. See it right here? And that happened on December 17th. Okay. Where is the bottom for Bitcoin so far? The local bottom was on December 18th, the very next candle here. Okay. And then we had this huge run up. If you look at RSI, RSI has now put in a double top on the total market cap, which is a reversal signal. And not only that, but it has had a false break above the 200-day moving average and then come right back down and closed underneath it. And so far today, it is finding resistance at the 200-day moving average. So that's not good news if you're a bull. Okay. Now, full disclosure, I'm in a scalp long right now. So I'm still bearish, but I'm just trading what the market is giving me. I saw an opportunity to take a scalp long, so I entered that yesterday. It was a very small position. I entered at 86.20, I think it was. I don't even know what the price is right now. 86.57. So that's not really doing anything special. I probably should have got out before I went to bed, but we'll see how that plays out. But this is indeed looking pretty bearish. And if we go back in time, we can see that the last time we had a false break above the 200 was right here, and then we had it further downside. If we go back in history, again, when we had a false break here, we had further downside, false break here, further downside, right, so on and so forth. So as a bear, I really like what I'm seeing on this chart, right? There's actually a trade that I learned from a Wall Street guy. This was one of the first trading courses I ever took. It was from a guy named David. Oh my gosh, I forgot the guy's last name. I think it's David Green. Don't quote me on that. But anyway, David Green taught about moving averages, and one of the setups that he taught was called a far from moving average trade. And there was a couple of details to it, a couple of nuances to it, but the core thing that we looked for with that trade setup was we looked for price to get way far away from its moving average, the 200 moving average, and then we looked for it to come up and try to test that moving average. And if it was coming up from well below it, we would often be looking for short positions, and if it was coming down from well above it, we'd often be looking for long positions. Now, it doesn't work every single time, right? You can see right here that if you try to long this, you would have got smoked, right? But more often than not, if you're coming from far away from it, like right here and right here, you'll end up bouncing right off of that thing. What we don't want to do is we don't want to fight the 200 moving average when we're riding right around it. See how this was real close to it? So you wouldn't want to try to short that because it was consolidating right underneath that line. Okay. Also, if this thing consolidated right here and then broke above it, I would not have been trying to short that because it had just consolidated. It wasn't far away from that moving average. But in this case, we were far away from it, and we were getting up into this overbought territory. We're putting in a double top signal. We have all these things lining up that says that this could be a bearish scenario. Okay, so that's what I'm saying on the total market cap. And of course, if we draw, I'm gonna put this on a 3-day chart, get rid of the volume for just a second, and the RSI. That's what's a little easier to see. Get rid of the moving average. And of course, if we draw up our Fibonacci levels, if we're going long term, we're going to use a log format. Then we get something like this. Okay. And basically, we came down and found support right on this 2 level, bounced up right up to the 1 level. Okay. Alternatively, if you don't like that small little move, if you don't want to measure that, you could take the larger move from down and then this first pullback here. And again, still gets plenty of touches. I still think both of them look pretty good. In this case, we came down to the 1.272, bounced off of it all the way back up to the 0.5 up here. Okay, so again, can you trade the total market cap? I think you can. I think you can look at this and use it as a backup indicator for Bitcoin. Okay, let's take a look at the total market cap for altcoins without Bitcoin, and then we'll start jumping into the individual coins. So let's go to the daily. Slap a 200-day moving average on this, and we'll slap some volume on this, and let's put some RSI on this. Okay, we have a different looking picture on altcoins. If you look here, instead of dropping back below its 200-day moving average, the alt market cap is still sitting on top of it, right? It's hard to be bearish on altcoins when it's broke above its 200-day moving average like this. I think we have to take a look at individual alts in this case and say, okay, what are these individual alts actually doing? We did have a double top. It did come in. It did confirm on the RSI. It's up in the overbought territory. It looks overextended, but sitting on top of that 200 moving average and finding support over and over has to be more neutral on the altcoins, okay, as a whole. Again, we need to look at individual altcoins because we're not really getting a clear picture. This still has plenty of volume, right? Volume is not dumping off. It's starting to level off some, but it's not like it's just dried up and completely stopped, right? We're not way down here in these areas like back here. So altcoins still have my attention, and I'm still, in most of my alt positions, other than the, profit taking that I did yesterday on Stellar, EOS, and was that it? I think that was the only two I took profits on. Okay. Oh, and Bitcoin Cash, or not Bitcoin Cash, but whatever that BSV coin is, took profits on it. Okay, so that's kind of the altcoins. I think a little bit more neutral on those. Let's jump into Bitcoin. Okay, so this is the first Bitcoin chart we're going to take a look at. This is actually a 4-hour chart. And essentially we had this rising wedge here. And with this rising wedge, again, we talked about this in yesterday's video. It's a bearish signal. I did short 88.83. I closed the short down around 85.84. Took a long position at 86.20. Should have probably jumped out of that on this bounce. But what I'm waiting for, guys, is I'm waiting to see if this thing can come up and fill in this gap. So far, it just has not been able to get any kind of traction. But that's what I'm waiting for. And that gap, if you look, would line up quite nicely. It's around $8,925. If it pumps up and retests the underside of this wedge at the same time that it's filling in that gap, I could see that happening, and that would give me a chance to re-short it up here and then try to ride it down for the entire move. Okay. Couple things I'm seeing on this chart. If this turns out to be a downtrend, if this does not pump back up, if it just consolidates and moves down, our smaller trend target here is going to be down around $8,000, okay, which would be down right around this level. I think a lot of bulls, the more realistic bulls, I think they have actually been saying that they do think it's going to pull back to 8,000 or 8,500, and so I think there's some bulls out there who have not lost touch with reality. They could be right. It could be that is indeed the pullback, and that ends up being a wonderful place to go long for the long term for Bitcoin, right? If we draw some Fibonacci levels from the bottom in December, which was around $6,400, to the top, that $8,000 level, not quite to the 0.5, would surprise me a little bit if it got to 8,000 and didn't keep moving down, but That's crypto for you. It's full of surprises. I would expect if this is going to pull back and be bullish, that it would probably pull all the way back down to this swing high at least, down around 7,600 to 7,700 bucks, which is also where there's a CME gap at. Okay, so that's what I would expect in a bullish scenario, is to pull back there and then start going back up. That being said, right now I'm still macro bearish. Okay, if we take a look here at this is a little bit of an odd trend line. I cut out some lows here to try to get some touches. And this is what I was seeing last night before I went to bed. We had this as support through here, resistance here, bounced down, came up, it was support, and then it was coming up right about this area, I think when I first started drawing this line, and pinged off of it, came back down. I went to bed, got up this morning, and it's pinging off of it again. So that's what I'm saying. I'm watching that particular line. You can see here that volume is really drying up, but we're ranging, right? We're just moving sideways. So all this really tells me there's a big move on the horizon, right? I would expect a big move. It doesn't tell me which way it's going to go. Daily chart, not a whole lot there. We talked about it yesterday. We got the double top at RSI. We've got the hidden bearish divergence that is confirmed. We have the regular bearish divergence that is confirmed. If you don't know what that is, you can watch yesterday's video. I cover all that in a great amount of detail. And we are back underneath the 200 moving average, and this looks very much like an ideal textbook far from moving average trade, where we came up 30-40%, tagged that 200 moving average, and probably topped out and are moving down lower. Okay, what I want to do is I want to get a different Bitcoin chart up. This one's going to be just a nice clean 3-day chart, and again, on the price action side of things, if we take away all the moving averages, we take away the Fibonacci levels, we take away the patterns and wedges and all that kind of stuff. If we're just looking at the important levels, again, this was a level that was support for us. It flipped to resistance once we broke underneath it, and so far it just looks like a failed test of resistance. But remember, on the RSI, we had this box, this bear market box, and we really wanted to stay inside of that for our bear market. The only exception was the summer of 2018. We said it could pop out and come back down. What's happening right now reminds me of 2018. Again, I did an entire discussion on that on TradingView. You can check that out if you'd like to, if you didn't see my video on it. This went quite a bit higher than this over here, which did get my attention. And the other thing that really has my attention right now is if we draw this downward sloping trend line, so far it has not broke back underneath it, and this very well could end up becoming a bullish retest, which I talked about in yesterday's video. If this ends up moving up from here, it could be that support, and the bottom, the $6,400 bottom, was not just a local bottom, but the actual bottom before moving to new highs. So gonna have to watch that and be open to the possibility the bottom is in. Again, I'm bearish, guys. I'm not changing my stance. I'm just giving you both sides so that you have a fair assessment. You can kind of do your own due diligence and decide what you believe is happening. I do not believe the bottom is in. I believe this is indeed nothing more than a repeat of the summer of 2018. I think it's a pump that pumps right into the Chinese New Year, and I think it's getting ready to dump and just absolutely crush a lot of bulls. Okay, if we draw a trend line on the 3-day chart from close to close, it looks like this, and you can see that we are indeed back underneath the downward sloping trend line on the 3-day. If you didn't see the video yesterday, this is the same case on the 1-day chart. If I get rid of RSI down here, and I get rid of these moving averages, and we just look at this green line, this is the downward sloping trend line drawn from close to close, which is how most professional traders like to do things. Is look at closes, not wicks, and close to close to close, and bam, looks like a bearish retest at the top of our channel before more downside. Okay, and this is indeed a downward sloping channel in my humble opinion. Okay, if we take a look at this, we get something like that. Okay, if you want to draw it over to this area, you might even say that's the actual channel there. So if you're looking at the channel and you're looking at this thing, if it's moving back down, where's that next low at? Maybe down here in February, 5,800 bucks or so. Could be. These drops have typically been about a month long or so. So that put us down around 5,800 bucks to hit the bottom of the channel. Here's what I want you to keep in mind though, guys. These channels, by the time the average person starts to recognize them and go, okay, here's my support, I'm going to long there, that's about the time the channel's getting ready to break and give way. That could be either bullish or bearish. So for example here, trading this and going, okay, well, it's touching it a fourth time, it's definitely bearish, right? It could be getting ready to break through this and skyrocket. If it comes back down, I would not expect the channel to hold. I would not say that 5,800 bucks is going to hold. I would say it's probably going to break it and go south of that, okay? I just wouldn't trust that channel a fourth time like that. So if we go back to a candlestick chart on this thing, one thing I want to point out is what happened after the summer of 2018. So this was that false pump in July of 2018. It moved down, it consolidated a little bit. People thought the bottom was in. There's a lot of people longing through this area. And then it moved sideways for the next couple of months. Again, consolidating. People were calling this accumulation. They were getting excited going along. And then we finally had the capitulation, which is the last part of a bear cycle. Okay, we have not had capitulation in this cycle, which is one of the reasons that I've remained so bearish, because I started calling this a bear market back in July or August. And while a lot of people disagree with me, I think at this point most people agree that this was indeed a smaller bear market. Okay, well, here's the problem. Bear markets, let's go back to my profile. Bear markets end with what? They end with panic and capitulation. We haven't had that yet. Okay, so if we capitulate, you know, we're probably going to chop right through support. Right now, a lot of people are talking about $5,000 to $5,500, myself included, right? And that's because if you draw the trend targets, let's get rid of this downward line and just make this a nice, clean 3-day chart again. If you draw trend targets in this thing, it's actually going to give you a target down around 5,500 bucks. You can draw this several ways. You could say that, you know, this was the low, this was the pullback. If you do that on a log chart, 2.618 down around 5,100 bucks, which by the way is where the 2018 bear market stopped. Talked about this in a lot of videos, right? If you drew this from the first drop to the first pullback, 2.618 was the bottom. Okay, so that would make sense. Okay, but if we take that off and we draw it a little differently, we draw it from the peak to this first major low and this first pullback, then, you know, we get targets down around 6,200 for the 1.618, 5,200 for the 2, 4,600, and even down around 4,000, which would fill in this gap, which would be beautiful. This might be a better trend. I don't know, right? We don't know. That's just it. We have to take all the tools and try to, you know, kind of gather the information. But this would make more sense to me. I think the other one looks a little better, has nice, you know, cleaner touches. But this trend would make more sense to me if 2.618 ended up being the bottom, because it'd be down around $4,000 and it would take care of this huge liquidity gap. Okay. Also, from a capitulation standpoint, you have to remember that after this thing moved sideways, it was sitting around 6,700 bucks, and it proceeded to drop 50% on its capitulation. So if we move back down, right, and let's just say we move back down to 6,400, and then capitulate, what's half of 6,400? It's 3,200 bucks. Okay, which would be a retest of this low back here. Seems absurd. Seems like that's not even really, you know, reality. But, you know, I think it is. And I think if you look back in time, like the 2015 bear market, when it ended, it did come down, put in a low around 150 to 160 bucks, depending on the exchanges you're looking at. And then 8 months later, it dropped again, came back down under 200 bucks, and basically retested its low. Okay, so it's entirely possible. Let me draw this first trend back up. It is entirely possible that we do come back down and retest this low, or maybe just come back down to this level here, which would fill in some CME gaps that are living down around 3,500 bucks. Okay, and that's all assuming that this doesn't get really nasty like 2014 and you know, play out like that 1K fractal I've talked about in the past, where this ends up being a false bottom and we go all the way down to 1,000 bucks. Okay. Some pretty interesting stuff happening, and I think we're kind of at a pivotal moment with Bitcoin. And I think what happens over the next couple of weeks to 4 weeks is probably going to determine, you know, where this thing ends up at, you know, in 2020. Is 2020 going to be the year that, you know, it follows past performance and it pumps after the halving, and we end up at, you know, retesting our old high, maybe at 20 grand? Or is 2020 going to be the first time in, you know, quote unquote history that Bitcoin's halving has not pumped the price, and then it actually dumps. And you have to realize that the halving, this is only the third halving, so it's not a lot of statistical data to go off of in the first place. Statisticians would, absolutely go nuts if anybody was trying to use that data to predict the future. But, if it does not pump into the halving, if it's dumping into the halving, that could be the exact event that scares people, and they think, oh my God, this time is different, and they finally capitulate and sell off their coins. And that could be exactly the type of catalyst that would cause this to go back down to those 2013 highs. Okay, so I would keep an eye on this, and I wouldn't be overly, listen, you don't want to be overly arrogant as a bear, right? Like we talked about, we still have that, what looks like a bullish retest on that 3-day chart, so the bottom could still be in. I'm not trying to talk out of both sides of my mouth. I'm just trying to, give you all the, the picture, the big picture. You make your own decision. Me personally, I'm trading it as a bear, but you got to do what's right for you. You got to do what's you feel is best, okay? On the weekly chart. So yesterday was obviously our weekly close. Let me pull up a weekly chart. So let's load up a chart. We'll load up a weekly. Really what I want to talk about is a very simple thing. Okay. This closed. Where did it close at? It closed at 53.4 RSI. It closed inside of the bear market RSI. So it had popped up out of it, was just barely peeking out, and then poof, pulled back, closed inside the box. So that's great. It's a little higher than the July. July was around 51.5. This closed at 53.4, so a little higher, but not that different. Very similar to this pump back in July. The other thing is for all the people that are saying the downtrend is over, again, there is no bullish structure on the weekly chart. If you look, this was our high, this was our lower high, this was a lower high, and this is just yet another lower high so far. If this pumps up and closes above this yellow line, well, guess what? I think that it's almost impossible to say that we're still in a downtrend. Well, you can say whatever the hell. You can say whatever the hell you want, but I think it would be silly to say we're still in a downtrend if we can break above and close above $9,500 this week. Of course, we know that historically, Bitcoin has had a lot of trouble over these last 6 or 7 months putting in more than 2 green candles in a row on the weekly, right? Usually we get one, then red, one, then red, one red, one red, one red, right? We had 2 back here, 2 small ones. We had 2 right here, and then followed by 3 red. So I think this is going to be red, right? I just think that. Also in the 3-day chart, we had 6 green candles in a row. We have not put in 7 green candles in a row in the 3-day in over 2 years. So it would be unusual to do that. I do think this is probably going to be a lower high. And I haven't talked about it in this video because I talk about it in every video, but real quickly, just in case you're new to the channel, again, all this really did was come up and test the golden pocket up around the 61.8, which is where a lot of institutional money looks to short a market, okay? And Bitcoin specifically loves its 61.8s. Again, October, right up into the golden pocket. Okay, if you go back to the 2018 bear market, you can draw this over and over and over. Just kept coming up to that 61.8. All right, so that's kind of what I'm seeing on the weekly chart. I think that our high is probably in. Just my personal opinion. I'm going to take a look at some alts. I'm going to do this a little differently. I hope this shows up okay. I'm not sure how this is going to look in the video. With it being a quad chart like this, but we're going to try it and kind of see how it goes, and if it turns out terrible, then I'll stick to doing individual charts in the future. These are just 4 altcoins that I'm personally watching because I have investments in all of them, so I'll just talk about them real quickly, and man, I don't know if I'm going to be able to do this. It looks good when it's on a full screen, but when it's on the smaller screen for the recording, it looks pretty mushed up. Here's what I'm watching though. Zcash has put in a confirmed double top in RSI. We see volume actually dropping off, and we see price, trying to pull back to its 200-day moving average. I'm going to watch that 200-day moving average pretty closely. If it finds support on it, I may look to take some long positions on Zcash, and if it loses it, well, that sucks. But what I would do in that case is just simply watch this for a retracement back down to this 40-ish area and see if there's any support down there. Okay. Over on the Ethereum, same type of deal. These are basically all going to look the same, right? They've pumped up. Ethereum's case, it looks more bearish than Zcash because Zcash broke its 200-day. Ethereum did not break its 200-day. It's actually still underneath it. So I think more downside is probably due for Ethereum. It's got a double top on RSI. It just doesn't look good, right? It failed at some key levels of resistance, so it put in a lower high. And of course, if we draw Fibonacci levels, the non-log format didn't quite, well, No. Okay, well, it depends how you draw them. Let's get rid of volume because it's kind of messing up the... All right. Bear with me here. So yesterday I drew these fibs wrong. I just now realized it. Okay, so I had drawn these from this top yesterday down to here, and I said it didn't quite get to the 61.8, but it did. Watch. From this top down to here, it got to the 61.8, right? Right here, perfect shorting place, and then dumped. So I don't want to draw from this swing high. I want to draw from this swing high. So if I draw from this swing high to the swing low, where did it get? This actually broke up all the way up to the 78.6 almost. So that's a pretty strong move, right? If I had shorted that at 170, I probably would have got stopped out because that continued to move up. I didn't short it, but interesting. But it did fail to put in a higher high so far. It needs to really break this level here at 211. Let's look at a line chart. It's a little easier to see. You know, you could make the argument, and I don't think it would be wrong to say that, you know, if it breaks 188, you know, that's going to be a higher high. This was a low at 171. This was a lower low at 169. So this was a low, lower high, lower low, lower high. I think this is the level, 188. It needs to break and close above that on a weekly to make me get super excited. And of course, doing that on a weekly, 188, would also break above the 200-day moving average. So I would definitely be excited about Ethereum if that happened. If we look at Stellar, I took profits on Stellar yesterday around 0.0629, I think is where I actually took in profits at. So right now I'm actually a little bit underwater on that, but I'm fine. I'm not worried about it. We're still underneath the 200-day moving average. Volume is still drying up, and we're in the overbought territory. So I will be watching this a little bit closer today to see what's going on. But I think this is just kind of, you know, trying to shake out some last shorts and trap some bulls for further downside on it. Like Ethereum, it's been unable to break above its 200-day moving average. So for this one, I'll be watching it, and I'll be watching this level down around 5 cents to see how it's acting, if it can get down there. If Bitcoin dumps hard, and if it truly dumps hard, capitulates, obviously I won't be looking for long positions on altcoins. I would expect them to dump with Bitcoin. Okay. And then EOS is kind of, man, this thing is just so hard to see with all these things on there. I got a feeling this video is not going to be very good. The 200-day moving average on EOS was actually right here. It's tough to see. In fact, it's driving me nuts. I can't do it. I got to do it on a single chart. So on EOS, here's the 200-day moving average. It moved down, retested it perfect yesterday. I did not see that when it happened. I saw it after it already happened. But if you've been watching that and you've been super aggressive, you might have wanted to take a long there. You'd be up about 8% right now. I did not take a long there. I actually took profits in some of my EOS up around 375, 376, and 392. So the cost average is somewhere in that zone. And I'm just watching it now to see how it acts. I still think it's got further downside. I think it's pretty much topped out. But in this case, it's kind of like Zcash. I want to see what happens if it moves back down to the 200 moving average again. The fact that it already pinged it yesterday kind of throws me for a little bit of a loop. But, you know, we'll see. We'll see what happens with it. I'm not in a big rush to rush back into a position. That's something I did in the past. It used to get me in a lot of trouble. I remember buying EOS down around $1.70, and then I bought more around I think it was like $1.70 or something. My cost average was like a low $1 range, and it ran up to like 24 bucks. And I sold most of it. I can't remember exactly how much, but I sold like most of it. Like I want to say like at least 50 to 75% of it. And then I got stupid and bought it all back when it dropped to $17. And I remember at the time, like, patting myself on the back, like, dude, you just made so much money on this trade, right? You just sold it for 24, bought it back for 17, you made $7 per token. Yeah, but look, now it's worth $3. It was a dumbass thing to do, right? There was no reason to buy it back. I just got panicky. I was like, oh God, what if it goes back up, right? And again, that was, you know, towards the newer part of my trading career. I really didn't understand the markets that well. I was kind of gambling and guessing more than anything else. And I just got very, very lucky because I was trading in a bull market, so you could get away with stuff like that. Of course, then we turned into a bear market, and I realized that you can't do that. You lose a lot of money. So I'm not in a rush to buy this back. I mean, granted, yeah, I could have bought it back for $3.41, which would have been like a 10% gain or something versus where I took profits at. but I don't want to buy it back for $3.41 and then watch it dump to $2. Okay, so I'll wait and see what happens with this. I do have a feeling that it's probably topped out for now, and if Bitcoin dumps, I got a feeling it's probably going to lose its 200-day moving average and go ahead and go back down, but we'll see. I'm going to go ahead and wrap up there. Please remember, I am literally some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel, and don't forget to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and of course, a couple of links where you can support the channel with things like Robinhood, or you can join my paid trading course. All right, this is James with Crypto Common Sense. Please remember to trade safe.